Greetings, folks. This is DC Investing. I've reached financial independence, and I'm talking about topics that may help others on their path to reaching financial independence. And one of the major things that occurred last week was the Fed started lowering interest rates. And their plan right now is to lower, they lowered by a 1/4% last week. The plan is in October to do another one, and then December, another reduction. And if the economy weakens, they will continue to do more of these rate cuts. Um, and you kind of have to think about, well, what does that do to the investments or the investors out there? And I think it has two things that occur. I like investing for dividends, and I don't know if you guys are in that same boat or not, but that's something that I really enjoy. And so as the interest rate goes down, then your average retiree who may have funds in a money market account gets a pay cut. And so if you had been earning about 4% in a money market account, by the end of this year, you're only going to be earning 3.25%, which is a significant reduction in your income if that's one of the things you use to live on. And so if that trend continues, then folks that are retired are going to need to replace that income through some other source. And dividend paying stocks are one of the possibilities that retirees can use to replace the income. And if the Fed continues cutting, at some point you can't earn anything from a bank or a CD or a money market account, and you're going to have to get that income from someplace. And during the pandemic, there was a term that was floated called TINA, which basically was there is no other alternative to the market, because interest rates were so low at that time that the only way to get any yield was you had to be in the stock market. And so that could return somewhat. And if people start to look around for yield, they're going to look at some fairly safe companies to try to get that. And so utilities are one of the areas that has a somewhat higher yielding return. And there's a ETF called XLU that I've used before. I think it's somewhere in the low threes right now that you can get from XLU. So it's not great, but if you're only had the ability by the end of the year to get that amount out of money market accounts, it may tend to kind of lift up utilities, and so you can get some stock appreciation from that. The energy sector is something that has a higher dividend yield. XLE is the energy sector. I can't remember what the dividend yield is right off, but I think it's just under 4% or something. And so these types of companies may look better to investors over time as they seek for yield. I really like pipeline companies. There's a ETF MLPA or AMLP or MLPX. Those all own pipeline companies, and they have higher dividend yields. So if retirees are looking for more income, it may tend to push up the prices of these stocks. So that's something that can work in your favor. The other thing that works in your favor is all of the companies have debt, and as the Fed lowers interest rates, it tends to lower the cost of debt that some of these companies might have. And this works for any company that's out there. It can be a tailwind to the S&P 500 or the NASDAQ. If debt is cheaper, then the company's costs are lower. And so, the markets are kind of in an upward trend right now that could continue on for the foreseeable future, just because every company has debt, and as the Fed lowers rates, it makes it cheaper for companies to service that debt. So, it may be that the S&P 500 is really the place to be. Just stick with it if that's the way you do things, or if you buy the QQQ or the NASDAQ or something. Chances are there's a tailwind behind you at this point. But if the economy is slowing, if jobs are getting more scarce, then that'll work against the market too. So it's hard to say, where are we at right now? Is the market going to continue up? Will it go down? Are we entering a recession, or have we been in a recession for a while? No one really knows for sure. But those are some tailwinds that I think any company that pays a dividend, their debt servicing costs will get a little bit cheaper as the Fed lowers rates. And people who are looking for yield that need income may start looking more towards dividend paying stocks because they need the income. So it's kind of what's going on in our economy right now. Um, do I know that any of these things are going to happen for sure? No, I have no idea. I'm just an average investor, but just kind of trying to think long term of what may happen over the next few years. If the Fed continues to lower interest rates, then people are going to need income from some source, and they will get that either by owning stocks that continue to go up and selling a few of those, or from dividend investing or dividend paying stocks. So there's kind of some thoughts for today. Um, if you guys have any inkling or insight on what you think may be occurring over the next while, leave a comment below. And thanks for being a member of this channel. We'll see you. Bye.